This process is in its end game. The water has been draining out of the tub for decades, and now it's circling around the drain. Things are happening much more quickly. So I don't know whether it's this cycle, this boom bust credit cycle, or the next one. But eventually what's going to happen is that not just the dollar, but all fiat currencies, because they're all doing the same thing. They're all racing to the bottom of the hill, all approaching economic issues with ever greater liquidity. So all of them are in the same boat. The trend is the same. Eventually, all of these fiat currencies are going to lose credibility. And the only way you can quickly regain credibility in that kind of a situation is, not by raising more money through taxation, because you'll kill your economy, not by restraining spending, because that's never going to happen. The only thing you can really do is attach your currency to some kind of a standard.
As a leader in uranium discovery in Argentina, Blue Sky Uranium is focused on advancing a rapidly growing portfolio of uranium-vanadium projects into low-cost production, while respecting the environment, communities, and cultures in which they work.
Welcome back to Inside the Markets, official podcast of StockPulse.com. And joining me today, I've got Brien Lundin of Jefferson Capital, also runs the Gold newsletter and the fantastic New Orleans Investment Conference coming up here in, I guess, a little less than a month here. So, Brien, you've been in the game a while. We've talked for a while. I guess I'll bring you in hot here. I watched an inflation number the other day. I was sure the price of gold and silver would spike after that. It didn't here. Pull back a little bit, 36,000 foot view here, Brien Lundin. What do you think of the markets?
Well, the markets, and this is something I think people have to understand, and very simply, all of the markets, stocks, bonds, all asset classes, real estate, precious metals, tangibles, everything is driven by central bank liquidity and in particular, Federal Reserve policy. Even internationally, even globally, all of the other central banks take their cues from the Federal Reserve. So, Powell and company, they drive everything. And this has been a process that's been underway really since the 1960s, when we really got into deficit spending in the U.S., but most pronounced since the great financial crisis of 2008. And the markets have become attuned to this, and the prices of everything are set now on a daily basis by Wall Street traders who don't have long time horizons. So it's these hot money traders and their algorithms who are determining on a daily basis what the price of everything is. And they only look at what Fed policy is and where it's going. So anything that looks like it's going to restrict this flow of liquidity that is the lifeblood of all the markets is bearish, and anything that looks like it's going to increase that flow of liquidity is bullish, and not for any specific market, but all markets, everything. So sell everything, buy everything, depending on what the headlines are. And that's the kind of situation that creates ludicrous situations, like when the CPI number comes in much hotter than anyone expected, that gold is sold off. Obviously, that's a situation where anyone in fear for the future purchasing power of their currency would buy gold. But instead, the traders sell gold because the high inflation number is hawkish. It is indicative that the Fed will continue to restrain this flow of the lifeblood of the markets. And that's simply it. And it is absolutely ludicrous. It's a situation that has been in place for years and has a chance, I think, in the weeks and months just ahead of being upset a bit, as the Fed, I think, is going to run into a brick wall due to the cost of servicing the federal debt, given these much higher interest rates.
Yeah, let's get into that. There, it seems like the Keynesian position is winning here versus a responsible Austrian economics. So obviously, unsustainable debt here. I don't even know what the number is to service the debt. Is it like $1 trillion a year to even service the debt? So
Not yet, but it's getting there. People don't realize that that number, the federal interest payments, is calculated on a quarterly basis. It's an annualized number that's calculated on a quarterly basis. And right now, all we have to work with are through the second quarter. So not really factoring in any of the Fed's aggressive 3/4 point rate hikes, only those first couple of, much more modest hikes. And even so, the debt is so large now that those first couple of small rate hikes have caused the federal interest payments to soar to $600 billion a year, which is an all-time record. Beats anything before. And if you look at the trend line from the Fed's own website, it points straight for the sky. So the third quarter numbers, third quarter calculations are going to come out likely sometime in October, early October. And I think that's going to be a real shocker to the markets when we get those numbers, because they're going to start to incorporate these really aggressive rate hikes. So that's going to start trending toward $1 trillion a year. I think they're going to get toward $1 trillion a year. And I think that's a political barrier for the Fed, frankly. I think you're going to get some of the more liberal congressmen and congresswomen. You're going to get the squad. You're going to get AOC and Elizabeth Warren talking about the tremendous cost of servicing the debt. And why are we spending $1 trillion a year on these big investors, these rich people who invest in treasuries in China and other countries, when we could be using that market to fund universal basic income, student loan debt cancellation, all of these other causes, more entitlements, which will severely weaken the dollar at that point if you have that kind of serious talk in Congress about defaulting on the federal debt. Now, a lot of this is just supposition, in postulation, but the bottom line is the costs of servicing the debt are soaring toward $1 trillion. And that's going to put, I think, tremendous pressure on the Fed to at least take its foot off the pedal. And that would be enough to get these markets energized again.
We have 87,000 fully armed IRS agents to handle that task, I think. So let's move back and put the dollar on the table. And it's always seems like the indicator. That's where you're going to plant your billions of dollars if you're a hedge fund. We all revolve around the dollar, but is it a false indicator? I mean, 85% of its value removed since the removal of the silver in the coin. Is it just the power of the reserve currency? Explain the phenomenon of the dollar. Because if it was a junior, Brien, it would be diluted out of business. The brass would all be in prison for the moves they make with nothing backing it. So explain the phenomenon of the dollar and how long can it go?
Well, it's confusing for most people because they confuse the strength of the dollar with the dollar index. And that's just a relative reading of the dollar's value against other fiat currencies, primarily the euro. It's really a euro index more than anything else. So if the euro is weak against the dollar, and of course, Europe's facing, I hear, a couple of issues going into this winter, then that accounts for a lot of the strength of the dollar. Adding to that, of course, are the Fed rate hikes, which and the Fed has gotten ahead of most other central banks on rate hikes and fighting inflation. So that's overvalued the dollar, or value the dollar more highly against other trade currencies. The real value of the dollar is in the gold price, the gold being the constant arbiter of value, the constant standard of value throughout time, really. So all other costs, all other prices, they all fluctuate against gold. So when the dollar price of gold goes down, then the dollar is strengthening. And of course, that is happening as we speak. But again, I think the value of gold is being artificially held low, not just through the daily kinds of or sustained manipulations by traders for other reasons, but also by the fact that they're just selling gold along with everything else because of this hawkishness from the Fed.
What does the term Great Reset mean to you?
Well, it's the culmination of a multi-decadal trend. Where the U.S. is in a debt spiral right now. We'll soon spend $1 trillion a year to pay interest on the debt. And we're already in a deficit situation with about $1 trillion of steady state deficit going forward. So if you double that and add another $1 trillion to that deficit, you're not only adding to the debt, but you have to finance that. So how do you pay for that extra $1 trillion in interest? Well, you borrow more money. And so it's like you max out one credit card and you get another credit card. And then you max out that one to pay the debts of the first credit card. Then you max out that one. Pretty soon, even in this day and age, nobody's offering you another credit card. Now, obviously, what happens in the private sector, it's a different game for sovereigns, and especially a sovereign that prints the world's reserve currency, like the U.S. So we have different rules that we play by, or the government plays by, and it takes longer for these kinds of issues to play out. But this trend has been going on for a long time. It's been going on since the first guns and butter deficit spending of the 1960s. That's when these stresses first became apparent. And that's when, as the Fed just started to respond by loosening monetary policy when these stresses became apparent. And it's been a steady stair step down to now interest rates were very recently at zero again. The Fed had to create a alphabet soup of programs, including QE, TARP, everything else, to address all of this and create more funnels of liquidity into the economy. And the next crisis, they're going to have to do it again. So this process is in its end game. The water has been draining out of the tub for decades, and now it's circling around the drain. Things are happening much more quickly. So I don't know whether it's this cycle, this boom bust credit cycle, or the next one. But eventually what's going to happen is that not just the dollar, but all fiat currencies, because they're all doing the same thing. They're all racing to the bottom of the hill, all approaching economic issues with ever greater liquidity. So all of them are in the same boat. The trend is the same. Eventually, all of these fiat currencies are going to lose credibility. And the only way you can quickly regain credibility in that kind of a situation is, not by raising more money through taxation, because you'll kill your economy, not by restraining spending, because that's never going to happen. The only thing you can really do is attach your currency to some kind of a standard. And of course, the one standard that is suitable for that is gold. So I think it's going to end up, that great reset will come with some recognition that these debts are unmanageable. So the balance sheet can be cleaned up to a large degree by revaluing for instance, the U.S. gold holdings, U.S. gold reserves, more in line to a real world standard, but also setting that standard much higher. To back, say, 20% of M2, you're talking about a gold price of around $10,000 or more. That's not inconceivable. These days, when gold was under $1,000, it seemed like something way out of reach and fantastic. But it isn't that, with gold recently at about a couple of $1,000s an ounce, it doesn't seem out of the realm of possibility any longer. And in fact, gold is the only element, the only commodity in the world that you could significantly back currencies with, that you could significantly thereby raise the price of without disrupting any industry in the world. It would have very little effect on any price except the jewelry sitting currently in jewelers' showcases. And that's it. That is the only thing that it would affect. So it is uniquely suited for that purpose, and I think will be the only, therefore, the only thing that's looked to back currencies at some point.
Yeah, no, one of your speakers there, and we'll get into your conference here in a minute. Jim Rickards calls for the digital dollar and calls for an actual date, I believe December 12th. So I guess feeding off your last point there, this digital dollar, what's to it, I guess, from your perspective, and yeah, I think you just made a major component would be gold. Would they involve silver? Would they involve Bitcoin, a crypto? How would you see a cashless society, I guess, unfolding?
Well, they may attach it to something in addition to gold, but I don't think that would work. I think they're really two different things. There is attaching the dollar to gold. And what that does really, it doesn't mean that you can't devalue the dollar. It just means that everybody's going to know it when you do it. And they're going to be able to point the fingers directly at you and not the guy before you, not the guy after.
Imagine blockchain on the dollar now.
Yeah, well, that's the thing. The other thing, that's the digital dollar, the central bank digital currency. And that, quite frankly, is the end of the world as we know it. So I think we need to fight that with, torches and pitchforks and whatever else we can. And frankly, I think that Jerome Powell, and I get this really from my discussions with Danielle DiMartino Booth, who knows his background. I think that Powell is actually against a digital dollar and all that it would entail. And what it would entail would be very close control, ultimate control of every citizen and their finances and their wealth and their investments and their actions through control of their money to 4 decimal places. So it would be terrible. It would enable easily. It would be a greased rail to fascism in the U.S. And so I hope it doesn't happen. I think it may be inevitable in some form, but it's something that we need to fight with everything we've got.
Yeah, I always keep cash on me and tell everyone to keep it on exact change. But more and more places don't accept cash anymore. A little scary. So the last point here, Brien, I want to get into the supply chain a little bit here. Seems like COVID kind of wrecked things for these juniors, whether it be the price of the metal or certainly all the restrictions they've had to go search for these precious hidden treasures, as I call them. So yeah, give me your synopsis on the supply chain. How's the junior market? I'd call this the greatest buying opportunity ever, but that's been said many times before. So I'm tired of crying wolf here. How do you see it?
Yeah, and I've seen buying opportunities like this before, being in the market as long as I have. 1999, 2000, you didn't want to live through that. That was really terrible and even worse than what we're seeing today. Supply chain issues, I think they're mainly affecting costs for producers. They are affecting availability and costs and labor availability for drilling and et cetera for juniors. But I think all the other issues right now, primarily the price and direction of the price for the metals and the great washout from an investment standpoint in the sector is overwhelming any other issue. So I think that all of those juniors who are trying to get drill programs done in the North over the summer and trying to finalize and finish their drill programs at an acceptable cost, I think they would welcome supply chain issues being their primary problem. The primary problem is their share price and the fact that the window is largely closed for new financings, and money's going to start getting tight pretty quickly.
Yeah. Well, you're going to have several of them at your conference here. So yeah, let's get into that. One of the best conferences I've ever seen, New Orleans Investment Conference here, talking about October 12th to the 15th and in the Big Easy. So let's run through there. One of the best lineups I've ever seen, probably the best, to be honest with you. Certainly the vibe's a little down, but I think you've created an opportunity here. So yeah, let's talk about your conference.
Yeah, Rob, you've known me a long time, and I've been in this business for a very long time. I'm reminded of it every morning when I look in the mirror. But I've read everything. I read everything that's written. I watch everybody. I know who the really smart people are out there, the ones that have insights into the markets that are a slightly different angle than the vast majority of people. So they see things that not everybody sees. And they're eloquent enough to express that and give you actionable views into the future and what you should be doing now and in certain investments in sectors and strategies. So I know who the best people are out there. And I got them all in New Orleans this year, except maybe, frankly, there's probably two that I was not able to get to this year. And other than that, they are all there. I mean, I've got Jim Grant, I've got Danielle DiMartino Booth, Jim Rickards, George Gammon, Doug Casey, Jim Arurio, Rick Rule, Brent Johnson, Dominic Frisby, Tavi Costa, John Nigerian, Peter Bookvar, Lawrence Lepard, Dave Collum, Jim Stack, Adam Taggart, Adrian Day, Mark Skousen, Brent Cook, Nick Hodge, Lobo Tigre, Mike Larson, Jeff Clark. I mean, it goes on and on. Dozens and dozens of the people you really want to hear from today. And it's at the perfect time because, I think over the next few weeks, we're going to see things come to the head in terms of Fed policy going forward. And it could be a big turning point for the markets. The other big thing about New Orleans is the quality, not just of the speakers, but especially of the attendees. It really is a gathering of the best minds in investing. They're really successful investors. Anyone who takes the time to come to New Orleans, and obviously it's one of the most enjoyable experiences you can have at an investment conference, but it also demonstrates that you've come down here for the 3-4 days of the conference. It demonstrates that you're a very smart investor and a very successful investor, and you're information hungry and constantly looking for new insights. Those are the kinds of people you want to talk to. You want to share ideas with, get their best ideas, tell them what you're thinking about, bounce things off. The value of that is kind of unsung at this event, but people who have come know it to be true. They really appreciate that. They come back every year to renew friendships, make new friends. And it's something that has to be experienced to be really understood. I tell people, the best sales spiel I could get for why you need to come to the conference is talk to somebody that's been there and ask them. And that's all you'll need to hear. Talk to somebody you trust, because we have, a satisfaction guarantee. If you don't like your experience at the conference for any reason, we'll give you your money back. Just let us know after the event. And of course, over a limited time, but let us know and we'll refund your money. Over the many decades of our conference, I could count on one hand, the number of times we've had people request their money back. And frankly, I think those people were just confused of what the conference really was. It is the place to be, and I think this may be our most important event in well over a decade, given all of these forces kind of converging right now.
Yeah, I couldn't agree more. Unprecedented times. I don't know if there's any playbook to get us through something like this. So, Brien, appreciate your insights here at New Orleans investment or NewOrleansConference.com. And what's the best places to really keep track of you and your insights?
On Twitter, Brien_Lundin, at Brien_Lundin on Twitter. That you'll get my daily information. You can go to goldennewsletter.com and subscribe to Golden Opportunities, which is our free advertising supported news e-letter. And you'll get my views on the markets a couple of times a week. And Gold Newsletter itself is our paid subscription newsletter that comes out monthly and covers dozens of the junior mining stocks and my more detailed views on the markets and where they're headed.
Okay, well, we'll certainly look forward to seeing how it plays out, and best of luck to your conference. Look forward to checking in after. So, Brien Lundin, Gold Newsletter, New Orleans Investment Conference. Appreciate your time.
Thank you, Rob.